This is the 2025 FOREX Trading Empire Mentorship Program Lecture 13. The topic for this lecture is Tuesday and Wednesday model. In this lecture, we're talking about the Tuesday and Wednesday setup. In order for you to trade the Tuesday and Wednesday setup, we are anticipating a trade entry based off our trading plan on Tuesday and on Wednesday. So understanding the Tuesday and Wednesday trade setup is knowing that we're going to be using the weekly bias for higher time frame bias. Now, our higher time frame bias will be sticking to the weekly bias. And in the previous module, we talked about the weekly bias. We talked about how to align the time frame correctly using the weekly bias. We'll be using the 4-hour time frame. You use the 4-hour time frame for your confirmation. You wait for the 4-hour time frame bias to be aligned with your weekly bias. Once it's aligned with your weekly bias, as it was explained in the previous module, that we'll be waiting for a 4-hour shift market structure or a 4-hour trend continuation from a 4-hour reference point, leading to our intended direction where we're anticipating price to trade to. Anticipate a 15-minute and 5-minute entry between the range of Tuesday opening to Wednesday close. We'll be anticipating an entry within the range of Tuesday opening to Wednesday close. Looking for price to give us a 15-minute or 5-minute entry, 15-minute and 5-minute entry, depending on which time frame you prefer using for intraday setups. If I'm looking for intraday setup within this time, I'll be focusing on the 5-minute entry. But if I'm looking to hold the trade through trying to catch the daily range, then I'll be looking for the 15-minute entry. Sometimes it depends on the currency you're trading on. There are some currency that do perform best in the 15 minutes more than the 5 minutes. So you look at both time frame to see which time frame gives you the best condition to take an entry. Then you use that time frame to execute the trade. Take note of economical calendar. So during this time, you're going to pay attention to the economical events, read for that event during the Tuesday and Wednesday. Most cases, you wait till after the news to take your trade. If price were to give you a clear bias before the news event, I would advise you wait for the news event to drop before you take your trade. Trade after the high impact news event. But if the day that you're looking for your entry after the 4-hour shift in market structure and there's no news event during that day, you can execute your trade. Maybe there's no news event on Tuesday and there's a news event on Wednesday. You execute the trade on Tuesday because the news event on Wednesday will be used to trade to your target. Why, if the news event is on Wednesday and price shift structure, you wait after the news event, then you wait for that 5-minute or 15-minute entry, then you execute on the entry for price to trade to your bias. If there's a high impact news on the day that you're looking for your entry, wait till after the high impact news. But if the high impact news is not on that day, then you execute your trade. We'll be targeting the next 4-hour draw on liquidity. The next 4-hour draw on liquidity is going to be our target, in which we'll be targeting throughout the week, leading to the weekly bias, to the weekly target. So let's go to the chart. So we're doing a trade example on a sell trade. Based off this idea, today is actually Friday, and throughout this week I was anticipating lower prices on Euro JPY. Now we'll be applying this idea to this currency. So before you trade any currency, I've talked about it, you learn the currency correlation, and this currency is the Euro JPY. If I'm trading the Euro JPY, I'll be paying attention to the London section and the Asian section, also the Tokyo section. Those are my two major sections because I'm trading the Euro JPY, and those are the best times to trade this currency. Price will look to create the high of the day during the JPY pair. We'll talk about daily profile in the further module or further lecture. But in this lecture, let's stick to the idea that we are looking to trade this currency best during this time because we are looking for intraday setups and trying to catch the daily range. So we are looking for entry within the range of the London section and the Asian section. On the weekly time frame, we are anticipating a down close candle because price did a shift to market structure running out this low. After a run on this swing low, price did a shift to market structure, a retracement back to this liquidity void or liquidity gap. Price did a retracement back to the liquidity gap, and you can see the reaction away from the liquidity gap. Seeing two down close candle indicating a sell, the price is expecting the liquidity gap. That was our buys. That was my thought process during the retracement back to this liquidity gap. Seeing the price was expecting this liquidity gap, the first candle traded through this fair value gap, closed below the mid-range of the fair value gap. The next candle failed to create a high, still traded lower. Is a clear indication to anticipate this candle to go for previous week low, trade lower, creating a down close candle. We talked about your first target. Your first target is to look for price to trade to either the previous week high or the previous week low. If we're anticipating a down close candle, we're anticipating price to run the previous week low. So you can use that as an assignment to go through the charts on your own. I'll be placing the horizontal line. Going down to the 4-hour time frame. Now, first, you know your opening price. Here's your opening price. Your opening price on Sunday. Opening price of the week, you mark out your opening price because we'll be using this opening price as our equilibrium price. We are trying to sell, in which we are anticipating price to trade to run out premium liquidity, then anticipating a shift to market structure down to a discount liquidity. What are the premium liquidity above the opening price from the 4-hour time frame? You can see this fair value gap. And doing the swing high to the swing low, creating this fair value gap. Where's the other block? Here's the other block. Change in state of delivery. The other block. So these are the premium reference points we'll be looking for price to respect before a shift in market structure trading lower. Understand, we are looking for a trend continuation. So I won't forget to mention it. When you are deciding on your bias on the weekly time frame, now we are looking for a trend continuation due to the fact that price were expected this weekly open range gap. Price expected the open range gap and price have been trading lower. So we are looking for a trend continuation of the bias. If we're looking for a trend continuation of the bias, if you're looking for a trend continuation to anticipate lower prices and you look at your 4-hour time frame and the trend is still aligned, you're just looking for a retracement back to a reference point from the recent swing high to a swing low. Once price trade to those retracements, you align it with your section and you look for lower prices, and your target to be the 4-hour swing low because we are anticipating a downtrend. And if we're anticipating a downtrend, price will run out sell side liquidity to create a down close trend. So apply that same idea, the recent swing high and the recent swing low. Opening price, we are anticipating price to trade to a premium reference point. We have two premium reference points. We have the fair value gap and we have the order block. Press the retracement to the fair value gap, fill the fair value gap, traded higher to the order block before a retracement lower. Now, if I were to align this with the economical calendar, during this week we had two high impact news. On Tuesday, we have the unemployment change, while on Thursday, we have the retail sale. So aligning those high impact news will give you a clear perspective on when price were to reverse. So price reversed on Tuesday after the release of the high impact news during the New York section during the 8:30 a.m. Eastern Standard Time. That led to the retracement, trading lower for price to go for the swing low. And you can see how everything is aligned. The power of 3, premium price, lower, manipulation, distribution. During this phase of accumulation, price is accumulating position. Trade above the opening price, traded to a premium reference point as the manipulation, enticing traders to buy, did the full distribution lower, took out the sell side liquidity. Now, if we were to sell from either of these reference points, where would be the next drawn liquidity? Sell side liquidity. Now, you identify your target from the 4-hour time frame even before going into lower time frame. Next drawn liquidity, 4-hour sell side liquidity. Now, during this price leg before price respected this order block on Tuesday after the high impact news, what are the recent liquidity area? Here's a swing low. We'll be marking out this swing low as a target in taking intraday setups. Sell side liquidity. Now you understand that price open, accumulated, went above the opening price to a premium reference point, respected this 2 up close candle, which is an order block from this swing high to a swing low, respected the order block, traded lower, run out the sell side liquidity. Now we'll be aligning this idea with our economical calendar and our trading section. We are paying attention to the London section and the Asian section. So let's go to the 15-minute time frame. Let's turn on the section indicator. So our first section is on Tuesday. Here's the high impact news. The high impact news came out 8:30, led to higher prices for price to trade through the 4-hour fair value gap. And where is price trading to? Price traded to the 4-hour order block. After retracement to the 4-hour order block, during this time, you're not looking for any entry. This is the New York section. We don't trade the New York section using Hero JPY. You wait for the Asian section and the London section. Price traded, run out the New York section high. After you run on the New York section high, shift the market structure, retracement, fair value gap. Make this red. Retracement, fair value gap. This will be a sell entry because price is at a 4-hour order block. A retracement to the 4-hour order block. Shift the market structure, fair value gap, order block will be your entry area to look for an entry, and it's aligned with your section. You can see that during the New York section, price was actually manipulating. That's why you need to align the section accordingly. But if you're using the 1 hour time frame, you don't need to pay attention more to the section. But if you're using lower time frame from the 15 minutes and the 5 minutes to look for that specific time to execute your trades, will be the best section to trade that currency, which would be the section that is aligned with the currency. So in this Euro JPY, the JPY pair is aligned with the Asian section and the Euro is aligned with the London section. So during the Asian section, price retraced to this fair value gap. We expected the fair value gap. Where the price trade to? Price traded lower. Where's the next draw on liquidity we identify from the 4 hour? The swing low close to the opening price. That will be your target. You're looking for price to retrace to that swing low as your target. Price traded. Now, this is on Tuesday. You can have multiple setup with this trade idea. It's called the Tuesday and Wednesday trade setup because those are the days where you will find the high probability setup after the weekly profile. Because throughout the weekly profile, the best in the weekly profiles, we have lots of weekly profile. If I were to go through individual weekly profile, we'll be taking long going through individual weekly profile. So that's why I pick a specific time, a specific day for you to look for your setups. As long as you're sticking to these days, these are the days where the weekly profile will be creating high impact entries, high probability entries. Now on the London section, we're looking for a trend continuation to our daily bias because this will be your daily bias for price to run out the 4 hour swing low. In the daily range, I told you guys the first section will create the high of the day and the second section will create the low of the day. Asian section, the Asian section created the high, retracement to this fair value gap, traded lower, took out sell side liquidity. The London section did a trade continuation to the sell side liquidity. Market close, price did a consolidation back to the daily range before expanding. Now looking at this price action, looking at all the entries before price traded to the sell side liquidity, your first entry will be this fair value gap. Now your second entry will be respected the fair value gap, created a new swing low. Now here's an order block and here's the fair value gap. You can see how price did not even use a candle to close above the fair value gap, stayed below the fair value gap and at the same level of the order block. We're expecting the order block and the fair value gap led to a trend continuation. So you can see two entry levels to take advantage of. Where will be your target? Sell side liquidity. Traded to the second section, which is the trend continuation section. You're looking for a trend continuation to your target. But if price have traded to your target, then the second section will lead to a retracement or a complete reversal. So price haven't traded to the sell side liquidity yet. Price respected its fair value gap. Did a retracement back to the fair value gap before trading lower, running out the sell side liquidity. After the run on the sell side liquidity, that was all for the Tuesday setup. Moving to the Wednesday setup. So the London section is actually on Wednesday, which is this entry was on Wednesday. Price did a retracement, run out the sell side liquidity as your target. Now the prices were expecting this order block going to the Asian section on Wednesday, you know that you're just looking for an entry for price to trade to your weekly objective, which is the sell side liquidity below price. Price day retracement, fair value gap. You can see during the Asian section, retracement, price respected the fair value gap, created a swing low, running out the sell side liquidity from the swing high to swing low. Respected it, traded lower, run out the sell side liquidity. Now, after price reach your weekly target, you just need to reduce your entry, kind of stay put to wait for the next week. Or if you are to take a trade, you look for little intraday setups based off the daily bias, if I were to advise on it. Because price reiterates your weekly objective, it might lead to a retracement back to the weekly range. And you don't want to be in price where price is trading to doing those retracement back to the weekly range when you are looking for sell, because it will be showing you false entries. Price trades your weekly target, sell side liquidity. After you trade to the sell side liquidity, this is on Thursday. You're not looking for an entry on Thursday, but you can still look for an entry on Thursday if you are using the daily bias. But based off this trade setup, the Tuesday and Wednesday trade setup, you can see we took first trade on Tuesday, second trade on Tuesday, Wednesday London section, Wednesday Asian section. After aligning it with your high impact news, after the Tuesday high impact news, the high impact news traded price to the order block, shift in market structure during the Asian section, retracement back to the fair value gap, led to lower prices, run out the first 4-hour target, sell side liquidity, and the second trade traded to the sell side liquidity. Now, if we were to place a position tools, if you were to be patient enough to wait for setups like this, these are the times where you be holding price to catch the high risk to reward trade, like a 1 to 10 or 1 to 5. I would advise at an early stage you look for easy targets, maybe like a 1 to 5 at first, because holding trade, looking at your profits, being in profit and price might retrace at any time, lead to some few anxiety on for you to close the trade more easier or more quicker. But we'll talk about the Tuesday and Wednesday setup more in the trade reviews we'll be doing in the 2025 mentorship program. But this is just the basic of it, understanding the Tuesday and Wednesday trade setup. So that is all for this lecture. See you guys in the next lecture.